Hey, welcome back to Finance Forge. If you're in your 20s or 30s and tired of hearing that investing is all about riding out wild market swings, let's talk about Stephen Bavaria's income factory strategy. Think of it like this. Instead of chasing hot stocks or panicking over red days, you're building a factory of investments that churns out cash, dividends, and interest every month. The goal? Reliable, steady income that keeps growing, even if the market acts up. Here's how it works. Bavaria's method focuses on high-yield assets like bonds, REITs, closed-end funds, and business development companies. We're talking yields of 8 to 10%, way higher than the SP's measly 1.5%. It's like what Kiyosaki preaches, let your money work while you sleep. Why now? With the gig economy booming and inflation always lurking, consistent returns matter more than ever. Bavaria is big on reinvesting those payouts, so your factory compounds and grows, aiming for 8% income growth each year. So how do you start? Step 1. Grab his book, The Income Factory, or check out Inside the Income Factory on Seeking Alpha for community picks and updates. Step 2. Open a brokerage. Fidelity works fine. And start with something like JEPI, a high-yield ETF. Step 3. Diversify. Maybe 40% bonds, 30% REITs, 30% funds, and reinvest everything automatically. Step 4. Monitor your progress every quarter and learn from others building their own cash machines. Some folks are pulling in $2,000 a month by age 35. Remember, balance yield with ethics, low risk, steady cash, and a focus on long-term growth. This is just the intro. If you want lifelong income, dig deeper into the Income Factory. Subscribe for more financial tips.